It's become a very, very significant trip, of course, and it's the big announcement that British Prime Minister Theresa May visiting Africa for the first time, or rather sub-Saharan Africa for the first time since she was put in as Prime Minister of Britain in 2016. She did, of course, come to Africa. That was particularly in Tunisia, which is not part of sub-Saharan Africa, and she becomes the first Prime Minister to visit Africa, visit sub-Saharan, that is, since David Cameron came in 2015 for Nelson Mandela's funeral, but his diplomatic visit was in 2011 when he visited both South Africa and Nigeria. So in the meantime, I just thought I'd touch on a few trade statistics between the United Kingdom, or Britain that is, and of course South Africa and Kenya and Nigeria. Very key and very important elements. In 2016, African exports to the United Kingdom amounted to 243 billion rand, and it was 163 billion for exports from the UK into Africa. So that became quite a critical number there. Of course, over the years it's grown, but what hasn't grown, however, is just if you take a look at this number over here, since 2012, exports from Africa to the United Kingdom have actually dropped off at least by 50%. So that number is certainly not good. And let's remember that the visit by Theresa May in itself is just about shoring up support for Britain and ensuring that trade deals and trade issues are certainly shored up post-Brexit, which is bound to happen in 2019. So ensuring that the right trade partners are put in place is quite critical and quite key. Nigeria takes up around 7% of the United Kingdom's trade, while Kenya takes up around 2%. South Africa is as much as 60% on average when it comes to trade from the UK to Africa, of course. It is the second largest EU exporter, but the seventh largest exporter in the world as well. 183 billion rand. That's the export between the two, between the UK and South Africa predominantly. And as you can see on the other side there, the types of things that we do export from Africa into the UK: gold, oil, vehicles, cocoa beans, diamonds, citrus fruits, tea, coffee, and wine, excuse me. Imports as well, we're getting vehicles out of the United Kingdom, turbojets, aircraft, alcohol, spirits, and generators as well. The United Kingdom invested in 333 projects costing around 159 billion rand. That's between 2003 and 2017, and around 400,000 Britons come to South Africa annually as well, and plus minus 50% of SA exports to the United Kingdom are either precious metals or considered unclassified. Just some trade statistics ahead of Theresa May's visit to Africa. Let's check in now on your market news, and particularly in Asian markets, which rallied this morning following a record lead from Wall Street. While the dollar did recover some ground but remained under pressure after the Federal Reserve boss suggested it would appear that it would not speed up the timeline for the interest rate increases. The yuan also won support after the People's Bank of China said Friday that it had made a policy tweak in order to prevent the currency from falling too sharply. Tokyo's Nikkei index ticked up almost 1%, while Hong Kong's Hang Seng was up 2.2%. And as you can see, it's at 28,271 points. The Shanghai Composite, 2,780 points. The benchmark S&P 500 index clinched its longest ever bull market run on Friday, closing then above its previous January high as Federal Reserve Chair Jerome Powell affirmed the U.S. Central Bank's current pace of rate hikes. The Dow Jones picked up 0.5% to close at 25,790. The S&P 500 gaining 0.6% to end at 2,874, while the Nasdaq Composite added 0.86%, ending the day at 7,945. Green market trading across South Africa, particularly when you take a look at the JSE All Share, including the resource stocks, industrials and financials, all going higher, while the SAPI is, however, down. If you take a look at the rest of the markets. A lot of green on the market picture there, and let's unpack a whole lot of that with Viv Govender from Rand Swiss joining us as we talk about the markets. Viv, thank you so much for your time, but let's quickly just talk about how that board behind you just seems to just be in green today, and it's become now a sixth day in the green. What exactly is going on?
I think it's a couple of factors. Primarily, it's the lack of impetus from the Fed chairman, the U.S. Fed chairman, in terms of more rate hikes than expected for 2018. That's obviously a bit of a positive. He says basically he's going to carry on being data-driven, and that has helped us and also global markets as well. We've also seen some support come through from the Chinese central bank as well. And those factors, I think, at the moment are supporting the market, despite the fact that we still have, quite tenuous, tensions between the U.S. and some of its trading partners.
Are you expecting a pullback, though, considering it is running hard to and headed towards 60,000 points there? Do you expect it to pull back ever so slightly, perhaps later this week sometime?
Well, I don't know about that. I mean, if you look at it, our market has gone towards these highs again. But quite frankly, if you look at us compared to the European markets or the US markets and a number of international markets, in hard currency terms, in dollar terms, for instance, or euro terms, we've just lagged international markets quite significantly for quite some time, several years, in fact. And so, I mean, you can't argue that we have, outrun this bull market. There is an argument to be made that our economic growth rates and other factors do mean that we are more vulnerable to a bit of a pullback. But I don't think that if you look at us compared to other global markets, the argument can be made that we've outrun them.
Yeah. I suppose the big question then becomes that on the company news, and considering that we are still in earnings season, you see the likes of Advitech coming out with their earnings results, not necessarily the greatest time for industrials by the seams of things.
Yeah, look, I mean, Advitech is pursuing more of an education-based approach. I mean, after that, the Concord judgment against, labor brokers is obviously negative. They have about 14%, I think, of the revenue comes from that particular part of the business, the staffing business. And not all of it, of course, is just labor broking, some of it's other stuff as well. But they have really focused on the education part of the business, which makes sense. South Africa regularly lags international benchmarks when it comes to literacy as well as mathematical competence, etc. And our students obviously are being underserved by the public school system. And so parents will obviously have an incentive to go and try and find some form of better schooling for their children. And Advitech, I think, is taking advantage of it, following Kuro's path. That being said, I do think that that part of the business is reasonably secure, but when it comes to, for instance, like I said, the staffing business, the labor broking business, there's some pressure there. As well, I think there should be also some pressure coming through, likely with the tertiary education business, which is a far bigger part of the business than the staffing business, though still smaller than the secondary and primary education business. I do think that if you have to look at, some of the things like, for instance, fees must fall and free education, etc., in the tertiary institutions, it's hard to compete when the public, option is free.
Yeah. That is definitely going to be hard to compete. I suppose we'll continue to take a look at that one. But no market picture is complete without taking a look at Naspers, around 2% higher as well, 3,607 Rand a share. Is there any end in sight to that uptick? Do we get to that 4,000 Rand level again?
Well, I mean, part of it is obviously supported by the fact that Rand is a bit weaker. So in hard currency terms, it isn't quite as good as it looks. But yes, we have recovered a little bit in Rand terms. Look, Naspers, more primarily Tencent is the main issue here, of course. We need to see what the Tencent future looks like. They've had a bit of a rough patch with their regulator, which is the Chinese regulators. They've come out and basically hurt them with regards to some of their new game launches, etc. Banned some things. Depends to be seen just how long this kind of pushback from China goes on for.
Sure.
At the same time, we've also seen some moves from international operators, companies like Facebook and Google, to alter their products so that they can get access to the Chinese market, and more competition is obviously a negative. That being said, I think Tencent and Naspers through Tencent has a huge kind of embedded advantage with their WeChat platform. It's an incredibly powerful platform in China, especially offering far more than just chat. It offers you payment abilities, the ability to do e-commerce and that kind of thing. and it has been incredibly, powerful in that country. But still, they need to do something about the gaming systems, the gaming launches. I mean, basically find a way to make sure that the government approves of what they are launching to the market, and therefore they are able to still return on the growth path that they had in the past.
Yeah. Viv, you alluded to it a little bit earlier, and I'm looking at it right behind you there, 14 Rand 32 against the US dollar. Should we get used to the Rand at these levels?
Honestly, I've got to say, this is like one part where I got to say I was wrong when it came to the Rand. I thought the weakening would have subsided to a certain extent by now. I certainly didn't expect us to remain so firmly above 14 Rand to the dollar. Just after the shock, 15 Rand plus burst we had a couple of Mondays ago. I do think that, looking at a market at the moment, there have been some self-inflicted wounds on our own side, but I do think to a certain extent the move, the breakout that we had above 14 and, to where we are right now has partly been driven by international factors that don't really have a fundamental linkage to South Africa. That being said, the Rand can remain, reasonably undervalued for quite some time, and I think, by some estimates in terms of where it is relative to fair value, more often than not, it's not in the fair value range. It's either under or over fair value, rather than in the fair value range. Something like a 2-to-1 ratio that is going to be over or undervalued. So the Rand probably should be stronger than where it is right now, but I would not put money on it being, back to where it should be by tomorrow or the day after. Often we can stay, well out of the range for a little while longer than that.
14.33 against the US dollar. That's where it currently sits. Viv Govender, truly appreciate your time there as we unpack the market picture. Another green tinge as well for Bitcoin, but that's where the buck stops. That's all your business for now.